Those who hold real money walk into the next era not just debt-free, but truly free, because sound money will have, quite honestly, maintained your choices and your freedom. And we can't just think about ourselves in these terms. We have to think about the world, because this is the opportunity to get redeemable gold, sound money, back in the system again. These central banks and these governments, they're not going to give up their money monopoly really easily. Why would they? They're not giving up their power. So we need to come together on a global basis, create a quiet and peaceful revolution just by converting your garbage fiat into sound money and demanding redeemable gold be back in the system again.
Beneath the surface of the global financial system, a more profound change is taking place that goes far beyond day-to-day market swings and into the basic structure of money itself. A rising number of analysts are starting to doubt the long-term stability of fiat currencies and the viability of the current monetary system, even as the majority of investors continue to concentrate on interest rates, inflation figures, and short-term price swings. Gold and silver are once again gaining attention in this climate of growing uncertainty, not just as commodities, but also as strategic investments linked to systemic resilience and wealth preservation. Within this evolving landscape, Lynette Zang offers a perspective that goes beyond conventional market analysis. Rather than viewing gold as a reactive asset driven by supply and demand, she frames it as a cornerstone of monetary stability, one that has historically played a critical role during periods of systemic transition. Her thesis suggests that what we are witnessing today may not be a typical market cycle, but the early stages of a broader monetary reset. If you find value in this content, please take a moment to like the video, subscribe to the channel, and turn on post notifications for more videos like this.
If your current mortgage debt is, say, $850,000, and gold were to go to fundamental value today, because remember, the more debt they grow, the higher that number goes, then that would take you 23.53 ounces of gold to pay that mortgage off. Here's the entire above ground stock of gold. All the gold humanity has ever mined compared to a single house. And next to it, you see the 33 categories of gold users: central banks, jewelry, technology, ETFs, investors, institutions, sovereign wealth funds, and more. That's just what I could think of. And this is the key point. Gold is finite. The user base is finite, but could grow as well. Everyone wants it, but only a tiny amount of it exists. And that's why gold's true value is so much higher than the price you see on a screen, that spot price. So let's go back to how you get this. Using the global fundamental value of gold to pay off that $850,000 mortgage, let's apply the global fundamental value to your mortgage example. At the true monetary value of gold, forget that spot price. It takes just 23.53 ounces of gold to pay off that mortgage. That's it. This is the power of holding real money against a fixed fiat liability. The liability stays the same. The purchasing power of gold rises to meet that reality. And we can use that same strategy. So let's start with the core of the sound money strategy, because a mortgage is a fiat promise, but gold is actually real sound money, one that can be created at will, and the other, well, it's finite, scarce, and outside the system. So the real question isn't how do I pay off my mortgage? It's how do I use sound money to eliminate a fixed rate fiat debt? Because when gold rises to its true fundamental value, and that's one guarantee that I could totally give you, the value that's really implied by global debt and collapsing currency strength, The number of ounces required to wipe out a mortgage doesn't go up, it goes down, and fast. And that's what I'm going to show you today. So this is the mortgage balance sheet that we're working with. You can plug in your own numbers, but for today's example, we're going to use an $850,000 mortgage. And the question is simple. How can gold, a finite monetary metal, pay off a fixed rate fiat mortgage? And to answer that, we need to understand what gold actually is worth when it's not being suppressed by derivatives, leverage, and synthetic made-up supply. So we're going to go to the fundamental value of gold. And this is how you get that. I mean, it's really quite simple. Again, we talk about the amount of debt that there is. Now, this is just in the world. So according to the IIF, there's $324 trillion worth of debt in the world that we're talking about. But there's also a finite amount of gold. That, if you divide all the debt by all the gold, that means that the true fundamental value of 1 ounce of gold at this moment in time is over $36,000. In today's markets, it's somewhere around, on the fiat markets, it's $5,000. So can you see how paying off your mortgage with gold could happen? Because with gold, there is, like I said, a finite amount of it, and they're not making more. Gold is the only money that has never been created by humans. At the same time, you have 33 different users of physical gold. So there is a finite amount of gold with the broadest base of buyer. That's why I can guarantee you, one of the reasons why I can guarantee you that it will go to fundamental value.
Building on this notion, she provides a straightforward explanation of how gold and world debt are related. She contends that the true value of gold should be determined by contrasting the $324 trillion global debt with the finite supply of gold. In this sense, gold might be valued a lot more than it is now, particularly if the financial system undergoes a significant reset. Mortgages and other debts remain fixed under such circumstances. However, gold's value can increase dramatically. This implies that paying off the same amount of debt would need less ounces of gold. In other words, the actual weight of debt may seem much lighter when gold prices rise. This way of thinking also changes how you approach personal finance. Instead of focusing only on earning more money or paying off debt faster, she suggests focusing on owning strong, reliable assets. If gold increases in value the way she expects, it could reduce what might normally take decades of payments into something much more manageable. Please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this.
Why does that matter? Because revaluing gold is the only tool that governments have that repairs solvency instantly, doesn't require new taxes. I mean, it's kind of a big tax, those overnight revaluations, but they don't have to go through legislation. Doesn't require new debt because they're taking care of the old debt so we can move into a new system. And it doesn't trigger political backlash because it's not visible to you. You just wake up one morning and it's done. And when central banks talk about revaluation, it's because they know the system is running out of options. Let's look at some specifics, because the Dutch central bank governor on gold revaluation said that, the account is a solvency backdrop, and that the ECB may have to revalue gold higher than the current market price. They're admitting it. And my mom always told me this, and I believed her, and I told my daughters too, and I'm telling you now, when somebody tells you who they are, believe them. So here you've got a central banker saying that gold is their solvency backdrop. Of course it is. This is not a fringe idea. This is a central bank policy thinking. They know gold is the anchor. They know that fiat is the variable. And they know revaluation is the release valve. They have no choice about this. And quite honestly, here are 3 historical examples of overnight gold revaluations. And you can see they are not gradual, they are not market-driven, they are overnight. When the system needs stability, gold gets repriced. And actually, it's not really gold getting repriced. It's the fiat money getting repriced and all those fiat money assets. Gold is the ultimate collateral, the ultimate trusted collateral. It doesn't just protect wealth. What it really does too is it compresses time and it turns decades of mortgage payments into ounces. And when the system resets, as it always does, those who hold real money walk into the next era, not just debt-free, but truly free, because sound money will have, quite honestly, maintained your choices and your freedom. And we can't just think about ourselves in these terms. We have to think about the world, because this is the opportunity to get redeemable gold, sound money, back in the system again. These central banks and these governments, they're not going to give up their money monopoly really easily. Why would they? They're not giving up their power. So we need to come together on a global basis, create a quiet and peaceful revolution just by converting your garbage fiat into sound money and demanding redeemable gold be back in the system again. If enough of us do this, our voices will be heard. I absolutely know it. I absolutely know that our jobs of people on this planet is to share the gifts that we've been given. You and I, we've been given the gift of sight to see what's coming. Most people haven't. So it's us that understand it that have to come together and make that difference for everybody. Be everybody's voice. And we can take our power back. And after all, who knows more about what they're doing to the currency than central bankers do? And frankly, money printing is the only tool that they have left. So here's the long-term trend of central bank gold buying: decades of accumulation, decades of preparation, decades of quietly shifting from fiat reserves to real reserves. Central banks don't buy gold for decoration, and they don't do it because it's historical. They buy it because they know what's coming. And here's the recent acceleration: record purchases, record demands, record accumulation. Central banks are not waiting for the reset that they're preparing for. They are preparing for a reset. Make no mistake about it. There's no other choice. And the question for you is really simple. Are you positioned the way they are? Because when gold is revalued to its true fundamental value, the number of ounces you hold will determine how quickly and how completely, frankly, you can eliminate your fixed rate fiat liabilities. The Federal Reserve has already acknowledged the possibility of official gold revaluation, and it's not just in theory. Both in the U.S., in Belgium, and many other parts of the world, they are openly discussing marking gold to a higher value to strengthen their balance sheet. How about to pay off that unpayable debt?
A compelling concept of how governments and central banks handle financial crises is being explained by Lynette Zang. She claims that a revaluation of gold is one of the quickest methods to correct the economy when it becomes unstable or overburdened by debt. This entails a rapid, sometimes overnight, increase in the official value of gold. She claims that governments find this approach appealing since it eliminates the need for tax increases, new debt, and drawn-out political procedures. Rather, it occurs subtly in the background, and the majority of people are unaware of it. She supports this this idea by pointing out that even central banks have openly talked about gold as a key part of financial stability. For example, when officials say gold acts as a solvency backstop, what they mean is that gold helps support the entire financial system when things start to break down. In her view, this is proof that gold is not just another asset, it's actually at the core of how the system holds itself together. She emphasizes an important lesson. When people in power clearly tell you how the system works, you should take them seriously. To her, these statements are not random, they are signals of how the system will respond under pressure. She then explains that throughout history, these kinds of gold revaluations have not been slow or gradual. They happen suddenly, usually during times of crisis. And more importantly, she argues that it's not really gold that is changing in value, it's the currency that is being adjusted. Thank you for watching and see you in the next video.